Hey, Chris, how are
Hey
you,
Dale, how
buddy?
are you, sir? Great, great,
Good,
great. How's
good.
everything?
What's on the menu?
Well, I actually put together a presentation, a bit of a presentation at least today, if
Wow.
you're interested.
Yeah, sure.
I,
What, you
I
got
came
like a
prepared.
PowerPoint you want to show?
Yeah, I'll blast through that real quick and
Okay.
give my case, and then we'll take a look at a few charts and then go destroy this trading day. All
Okay, sounds like a plan.
right, let me find it real quick. That's the one. Make sure we're all seeing it.
Wow. It's psychedelic, man.
Stringy, man. Lots of
Yeah,
mushrooms in this chart and
yeah.
stuff, probably.
Yeah,
Um,
you're tracking everything. So is this like
yeah,
a relative strength type chart?
Yeah, yeah. So this is since the
Okay.
beginning of 2024. We can certainly go back to
Yeah.
whatever resolution we want, but just I want to start this all off with like just how impressive cocoa
Yeah.
relative to, let's say, the
Everything.
Nasdaq has been.
Yeah. Yeah.
157% on cocoa, 72% on Nvidia, Dogecoin at 67%,
Isn't that
and
amazing?
yeah,
That was a joke, I thought, Doge. Turned out
it,
not
it
to be.
well I mean, it still is. It's just the people that trade it don't really care if it is or not, I suppose. All
Okay.
right.
What's the use? You carry it when
Uh,
you take your dog for a walk?
no, no. Much like the way I trade cocoa to make money.
Okay. All right.
Just
Just
really, it's
just
just
another pink sheet.
I honestly really that's what it is. There is a bit of a and I'm not a super proponent of like I'm not here to pump Doge or Cocoa or any of those. Just it's just a way where people are just putting their money in to make money.
Yeah.
But yeah, pink sheets is a great way to. So let me get going here. Let me start out from the beginning. And whoops, everything went just there we go. That's the one. Okay,
Okay.
so what I'm gonna be talking about today is getting into the right game and playing the right game and staying in the game. How important
Okay.
it is instead of just overall. That's what my thing is. So um, it's called table selection in poker, just finding the hot table, finding the right table, being there, being diversified about a bunch different strategies. If you're just a simple one, this only works on this asset in this time frame. Well, you got to wait every whatever 5, 10 years for that one setup to work for you, and that's great. It works really good over time if you can outlive it. But if you can diversify strategies as well as the asset you're trading, you can get a little bit more out of it and live day to
What's
day a little
your
bit better.
best strategy? I'm pretty good at finding the right table
Hmm.
and then entries. What's
Hmm.
your psychology and method for staying in the game? I think a
That's
lot of
actually
people
it's
have that problem.
absolutely absolutely. It's I actually have moved into the position of I am more than happy to stay longer and give it back, give
Okay.
some back because I know I will. We all know we will. We know we also the second we've gone, we go from like seven losers, 10 losers in a row, and you finally get that one and you get a winner, and you just think to yourself, okay, great, I'm out now. The more time you spend doing the statistical work on it, for me, and stop just getting caught up into the day to day, week to week returns has been the thing that helped me. And I'm not saying it's for everybody, of course, but the more I focus on that, the more I can let those things go and realize that one of them, two of them, four of them are going to really do all the work. And that's just going to take all of my attention away from every loser that every time I've tried to catch cotton or sugar for the last 6 months uh, has been far overran by the times that I've just sat in cocoa and watched it
Okay.
run. So
All right.
once you
So
get on
how
the
about
other side,
yeah?
it's
How
easier.
about a trailing stop is what I use to keep me in a trade. I may lose my discipline and say, I'm just going to book it, but a trailing stop is going to keep you in the market longer. instead of making a decision, you have something
Yes.
there so
Yeah,
that the
absolutely.
market makes a decision,
Yeah,
right?
a statistical tool like an ATR or a moving average or
Yeah,
a percent trail or any of those sort of
yeah,
things that just absolutely. I tend to use pretty much by the time something gets flat, I will end it. Let's say you go for a big 5% spike, 10% spike, and it just goes. And then we all know that it is going to go sideways for a little bit of time. And then just before it's about to take off again, it's probably going to go and get that last little group of people who are just hanging out for the next one. And then it goes, and then you get your stop out, and then it
yeah.
turns around and takes off again, which is fine because your same system that got you in should get you back in again if it is another breakout trend that
I
that
want to
gets.
acknowledge, Chris, last time you were here and I, talked to guests every 3 to 4 months, you were very bullish the stock market and S&Ps, and that was prior to the meltup. So were you able to milk that trade
Yeah, for sure. We've been and in fact we're not looking to lighten it up too much
even
here
now?
either.
Okay,
Yeah,
but
yeah.
I want to acknowledge you were, that's what you featured last time
It,
you were here.
yeah, that was the hot move.
Yeah.
It
So
thank appreciate that.
some hosts won't remember. Okay.
Yeah.
So
Yeah,
I like to acknowledge when people that come here, have conviction about something, and they're right. And I also bring it up if they weren't, which happens
yeah,
to
of
everybody. So
course.
anyway, great call, great forecast, and you're still long, so that's interesting. All right, go ahead.
Yeah, and definitely still the tech sector continues to be my main focus. But yeah, I'll get into a chart real quick here
Okay.
shortly
All right, I'll
about
stop interrupting you with
well,
accolades. All
that's
right.
fine. I always enjoy
And
our
people don't
conversation,
mind
Dale.
those interruptions anyway, so
All
go ahead, bro.
right, so table selection is the biggest thing. You make a lot of stakes if you go and buy uh cocoa before it hit, whatever 10,000 or whatever the number is. Um if you bought whatever S&Ps at 2,000, you can make a lot of mistakes along the way as long as your table selection is good. Diversification helps because if you have more than one strategy instead of just like it's a breakout, watch it run, that's great if you have multiple markets you're looking at, or you need to look at a separate strategy and ideally both. And then of course, risk management is the thing that because we're going to be wrong quite a bit. So just making sure that when we are wrong, we do it the right way, and when we're right, we take advantage of it. So my best tweet to date was a tweet about Paul Tudor Jones. Basically, I took it from his interview in the Market Wizards book, and I'm sure plenty of everybody paying attention right now has read the Market Wizards books. But if you haven't, you should probably just go and buy them all and start going. And one thing that stood out to me the most about that first book was the most successful traders that came out of the 1970s, Paul Tudor Jones, Bruce Kovner, and these Marcus Sequoia, all these guys, is they were the young guys doing the stuff that the old guys were telling them that they were crazy to do, that they were a bunch of cowboys, that they were a bunch of wild men. They should like stop playing that game and go do, go buy
Tape read?
Ford. What's that?
Go back to tape reading?
Go back to tape rating. Go, play your bonds, son. Stop messing around with this crazy lumber and crude oil and
Oh, I see.
commodities.
They didn't even
Uh,
like the instruments they were trading.
that's right. And they made
Okay.
fun of them. They you just and it's pervasive in the stock market in like the 2000s and 1990s 2000s. Everybody was picking on people. They're trading tech stocks. Um, it just kind of we're back there right now with the AI stuff. And so a great quote of his is he's like, look, there's about 5 different ways to play the market to make money. Two of those ways are mean reversion, which is a long short strategy. He says, or you can play momentum trend. And that's typically what I do. When something's cheap, they tend to get cheaper many times. They get removed from an index and then they lose all hope. If something's going down, I want to be short. If something's going up, they get added to the index, and that's kind of a self-fulfilling thing. So he's kind of really well known for his trend following and getting in and having a lot of losers. But when he has winners, he has really big winners, and that's a lot of what he talked about in that book. And that's the core foundation of what we're focusing on right now, which is, when things get going, we could look, NVIDIA is the second one here in this chart. The first one's Cocoa. And you can see that as we all have discovered for the last 30 years, NVIDIA came out of nowhere. Except if you built your own PC, you knew that NVIDIA chips were GPUs were or just video cards were like the best video cards 20 or something 25 years ago. But had you fast forwarded to where they are today, nobody would have guessed it. But
did Paul Tudor Jones say that the big money is made at the turns?
he did say that as well. Yep.
Okay, which isn't exactly trend following.
It's not
Uh,
exactly trend following.
and that's so that's what I took away from him, that the big money is made at the turns. But then you ride the trend, of course. But
Yeah.
you know,
No, that's a good point. I'm not
I catch
personally,
the
I
turns and then I don't ride the trends as long as I can.
well, and that's a good part of mean reversion. For what I did is I went out and I did a bunch of statistical research on this and
Yeah,
discovered, which is not anything new. Once you kind of figure out where you're going to fall into place, and then you say, okay, I'm good at just catching it when they get going, and then I actually have, and I'll get to it here in a second about how to stay in a trend a little bit better. Um, but this is, a really good example of a lot of people would have been taking cocoa off the table. And I don't have a chart, but the last time it
oh
was
yeah,
this high was the 1970s, right?
yeah,
Back in the 1970s, cocoa was this high. And of course, if you went up to the all-time highs, you were probably getting out of it. There's three phases to a trend. And those three phases are the actual early trend itself, which is this thing, as we can see kind of right here.
yeah.
I'll show it on Google. This is the early
Yes,
trend. And yes, it could be a cup and handle you could look at. You could see a lot of different things. But the trend is something that by the time it gets up to the top, most people don't believe the trend is actually intact. They think that's the end of the trend. And then it gets to this all-time high breakout level. And once that happens, that oftentimes sends it back down, right? If we were to, well, I
yeah.
guess looking
It
left is
did
not a good
once.
example, but you
Yeah,
get
it
your
did.
breakout, you get your retest, and then you're going to get a number of breakout retests along the way. It's definitely not a clean shot. But the actual big move happens in the momentum phase after it is trended so far, broken out, and then the momentum is where you get that's the parabolic
Yeah,
curve
the
that
money
tends
wave.
to happen. Yeah,
Yeah,
and most people
feel
try to buy
late, right?
this. Yeah,
Okay.
they'll try to buy this. They get shaken out, or they buy this and it goes, and then the momentum phase goes further and lasts longer than most people can actually mentally picture. And if we, that's exactly what happened to Coco. You can barely kind of see how it broke out, and then it just keeps going. So, um,
What's the
if we
next
add a
cocoa?
that
Silver?
was Coco.
Yeah.
So let's go and add a little bit of crypto to the number. And we start seeing that Coco's all the way down here, and crypto like Solana this goes back to October, by the way. So a little bit, this would have been the spot that Coco took over that we were measuring against. But you can see the crypto, Dogecoin, Coco, Bitcoin, Nvidia, Ethereum, triple Qs, are all kind of in that really big range that just started. You can see it's a bit of a trend.
Yeah.
And then we add in something that, so we add in things like the dog with hat, another, if you're confused about what Dogecoin does, you're really going to be confused about the fact that this is a meme coin of a picture of a dog with a hat on. Um, and
Okay.
and that has that has made 1,300% in that uh, same period that Coco and everything else did it. And then these AI coins, if you look at those sort of things, like they don't actually really do AI yet, but they say they do AI. And since we're talking about an unregulated market, you can just kind of do that. Whereas some of those electric automakers in the public markets that are regulated are having a tough time with just saying they do things.
Yeah.
Um, so I'm gonna kind of get this into a little bit more statistical side. So table selection is the best returning asset if we're looking at the Nasdaq, S&P, the dollar, Bitcoin by far. Um, is that 13,000% in 10-year returns versus 174%. But and trend thousands of years, but this is a 200-year chart of the trend. And if I go back and I show these three things, 47% compounded annual growth versus the Nasdaq. So that's like 3 or 4x the Nasdaq. And I mean, this is 1,000x, 10,000x the S&P in 10-year period. It doesn't give the whole picture, but it says, you know what? If you could be in trend over the very long period of time, it's going to work. And so what we see is that crypto is that amazing opportunity. I won't read all this sort of stuff out, but um, one of the big reasons that keeps crypto and the reason why gold isn't doing the big move that Coco's doing at the moment is because a lot of people are really prepared for the gold move. Nobody was prepared for Coco. Nobody's really prepared for crypto in the way that they're prepared for a gold or a Nasdaq or an S&P type breakout. And so, here's a bunch of risks, scams, 24/7, 365, volatility. You can have a 50% flash crash. Meme coins are the cool thing. Um, and then, of course, the drawdowns. This is a chart of Bitcoin's 70 to 80% drawdowns every couple of years versus a a gentlemanly 31% drawdown in the COVID period. Um, right. So of course we all know that if the volatility is there, there's going to be opportunity, and that's the big thing. So one of the things that I talked to, probably the most important part of this entire thing is the volatility, how you size your positions to play these things. If you knew that you had an opportunity to make like whatever, 1,000 or a 5,000% gain, do you think you needed to put, $10,000 of your $10,000 account to work on that? Or could you put, much smaller and still get the returns? And that's the whole point of taming trend following. And that this is it's called vol targeting. I don't want to get I know I'm getting a little too into it, but the one of the best trend following firms out there, ALH Man, has uses this thing called vol targeting, where the higher the volatility, you lower your position
Yeah.
size, and the lower the volatility, you have higher position size. It just kind of makes sense. And
A
if we get
lot
back to
of
that,
sense.
yeah, if we get back to that, it's like your position sizes, like as prices rise going into this, your position sizes drop. And that's where yes, the trend index underperforms buy and hold. Buy and hold makes you poop yourself um, during global financial crisis and things like that. But by using, if we look at the top line, you can see that the returns outperform, and you maintain control of your bowels in that environment.
Okay.
So, so trend following and risk management, you're thinking to yourself, okay, of course I'm willing to, I know that I'm going to get my butt kicked if I go into these super high risk markets because it's just, not worth it. Um, but I know the opportunity's there. So what I did is I ran the same algorithms on crypto and on futures. So it's long short trend of the data set that I could get. And again, just this was the This is the, whoops, by going long short crypto versus what we were looking at, the returns end up being 58%. I didn't get that extra line in here. You can't see it, but 58% compounded. So in a 10-year period, your $100,000 in the NASDAQ makes about $500,000. In Bitcoin, it makes 6.9 million. And in this vol targeted position, that means adjusting for position size, going long and short, everything you need to do, it even blows away Bitcoin's old buy and hold. And it does it with only a 20% drawdown as opposed to Bitcoin's 80% drawdowns. And so
Okay,
this
and
is
what
what
is
that looks like.
pollen? Is it an instrument you can trade? What is it?
Sorry, Pollinate Trading is the name of my company. That's the
Oh, I
strategies
see.
we use.
Okay.
I
All right.
should have said pollinatetrading.com on that. I
Okay.
want to get through it for you and not put your people to sleep before the market opens.
No,
So
they're hanging around. Okay. Barry
so
just
this
said
is
you've caught my attention. Salum says this is a great interview. Thank you
wonderful.
guys. Yeah.
Barry, love you guys.
You feel the
Um,
love? All right, go.
I love coming to chat with you all the time. This only goes back to 2020 because the
Yeah.
data set of crypto is new. But it's been doing live trading and staying the same since January 2024. That's a 620% total return. But the compounded annual growth rate at 50%, 58%, with a 20% drawdown, max intraday drawdown. Yes, that is crazy. I get it. The what we do is we do vol targeting, and basically for every dollar of risk, you make about $6 in return in crypto just since 2020. That includes the entire bear market of 2021, 2022, which you can see on the chart basically is this mild area of just mild spikes, and then we take off into the bull. So I went and did the same thing on 15 years of futures data, 15 years of about, I believe, 10 or 15, because it shouldn't just work in crypto. It should work in any market that trends, right? If you're going to have a trend, the trend system should work there. And this is a 15-year back test, so 50% better total returns, but the compounded annual growth rate is 38%, which is not is like 50% less than what you're getting the other one. The intraday drawdown is about the same, 21%. And no down year since 2010, 2009. Surprisingly, my data providers think that 2007 to 2009 is an important year to have in the data set when I ran it. Thank you guys. Wonder what happened those years. But since 2008 or 2009, there hasn't been a single down year, and you maintain the exact same risk profile as trading crypto. So the idea, and this is all the profitability, you have a, let's see, what was a painful year? 2015 had a 7% return. 2020, 34% return, 20, so not, if you're aware, this isn't too different than what you would have gotten, or this is a lot different than what you would have gotten if you just went like long S&P. So that's the summary here. And the point being is, if we just went long S&P, you're going to have major drawdowns and have a 12% CAGR. Whereas if you have a vol targeted diversified, and we're only talking about 10 to 15 futures contracts there, you're making about 40% returns with the same 20% drawdown compounded.
Do you have a
So
fund
that's
or a model account that reflects it?
I am I'm launching a fund. We're in the process right now of
Okay, cool.
yeah.
Congratulations.
Thank you very
Okay.
much. It's
All right.
en route.
All right, nice. Um, okay. You want to just cover this and
Yeah, I wanted
show your
to,
website?
as we were talking about last time I was on, was right over in this around this area in January,
Yeah.
if I believe, somewhere right
Yeah.
in there.
Yeah.
And I think,
Right
yeah, it was
after the
January.
breakout. Yeah.
Yeah, and that's where we went. You can
Nice.
see that the same pattern, trend,
Yeah.
breakout, retest,
Yeah.
breakout existed right there. So
Yeah.
it's not really anything new. And the smiley faces are when we added to our
That
position.
formation gives you 6,000.
Yes, I believe it. Yeah, somewhere around there, a measured move, or, a Fibonacci type extension in that area is pretty warranted. So there's two things that are really, if we got enough time, I'll take a look at them.
Go ahead.
Um, so this is the commitment of traders for large speculators. That's this down area right in here. And if we look back to, let's say, somewhere around the global financial crisis at the bottom and mass pessimism, we came out of that back in 2022's bottom, 2023's bottom. This is for the S&P 500, by the way. So speculators, large speculators are generally speaking for the last, let's call it 15 years, 10 to 15 years, we are positioned in the lowest area that we've been since global financial crisis. Peak was back in 2018, right after or right during Volpocalypse, for those of us that
Oh
partook.
yeah.
So we have been pretty much since that period, we have been in the most underpositioned large speculators since Volpocalypse, and then post COVID, we're still way down here, regardless of everybody thinking that we are, too high, too fast, and all that sort of stuff. This is saying, as we all kind of know, a lot of people missed it and they're waiting for those pullbacks. And so, um, one thing I monitor that keeps me in the game here is this is a 10-week average, 10-week simple moving average of the NYSE advancing issues. And I have the actual, that's the NYSE advancing issues. You can see that it's just sloppy and doesn't give you a whole lot of information. It's fast moving. But the 10-week moving average gives me a pretty good idea of where we are. When we get down into this area down in here, this is where I want to start seeing buyers or reasons to buy. And on the upside, it doesn't correlate nearly as well because markets go up, I guess. But I've found that anytime we get down into this little shadowed area on S&P, it isn't just an instant buy signal, though it very well could be. Uh, you have crash mode, which is when you get down to this, as you can see, the COVID one, we had crash mode in October of 2022. We got to crash mode, but we didn't actually crash, and that turned into the bottom. And so, as as a lot of us know who've been in this game, crash mode, the only thing that happens in a crash is that the government steps in, intervenes, and saves the market, or we all die. And we haven't had an example of us all dying since the 1930s so far. So that's about where we are right now. So right now, I'm just keeping my eye open for a reason to start looking to get long. I just picked up Google on Friday as one because it is outperforming right now. And now we're giving it back a little bit, and that's fine. No big deal. I'm not looking for a 5 point gain on it. I'm looking for the big money to kick in. And that's
Okay.
generally how I'm paying attention to the equity markets. And as goes the equity markets like this, it's going to affect crypto the same way. Pretty much
Yeah.
risk markets are going to always perform, World War III notwithstanding.
Okay. So why don't you show the people um, where they could get a hold of you, follow you? I know they could follow you on X at Christy Macro.
That's me.
Yep.
Yes. On X, go read the pinned thread from the Paul Tudor Jones here. At Christy Macro right there. My website, pollinatretrading.com. We have a trading group, not to compete with Face, of course, and a few trading systems that we've put together. You can get in and go around and find some articles. And I'm a wonderful follow, I think.
Okay, Chris is a pro. He works hard. You can tell he really puts in the time. You can't be lazy and be a good analyst trader. Dot dot dot. So thanks again, buddy, for coming in and edifying the community over the last few years,
Yes,
and
sir.
appreciate it. So good hunting, and always rooting for you, Chris.
Dale, I appreciate you, sir, always.
All right, Chris Dover, everybody. Check him out on X at Christy Macro, and he writes prolifically on X. He puts a lot of good content out there. And check out his website. And that's going to be a wrap for Turnaround Tuesday, everybody. Join the team in 12 minutes on the Morning Edge, where you could see where all the great traders that hang out together, what their edge is. So don't just count your pips or your seasonals or your positions, count your blessings. And I'll see you tomorrow. Adios, Warriors. Thanks again, Chris.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.